What's up, everyone? It's Karthik with MoneyVest. Welcome on board for our Monday morning live stream. As pre-market, most stocks and markets are indeed flying. We got QQQs up over 0.5%. We got SPY over 42 basis points higher, with a lot of individual stocks also recovering well, with SoFi up over 2.2%, Tesla's up over 1%. We got Nvidia pushing slightly down about 10 basis points. It has sold off a little bit here in a pre-market, but nonetheless, gold and silver are back trading at near all-time highs. Once again, it's up over 1.5%, trading back up to over $4,300 per ounce, and silver is also back at over $52 per ounce here, as of course a lot of individual stocks, including our hot watch list stocks, are once again flying high, with Bitcoin, Ethereum, so BITX up over 8%, Bitfarms up over 7%, we got BMNR up over 5% again, we got IONQ, Iron, we got Rocket Labs, ASTS, Joby, all of these, Rigetti Computing, all of them once again pushing higher on the day, with volatility here sitting in the mid-20s once again. So, the VIX is a lot calmer than Friday. Yes, the volatility definitely a lot more muted than compared to where we were on Friday. Of course, we were trading up to as much as 29, pre-market, and then we got a huge flush, a 20% sell-off in volatility, and right now we are back in the low 20s once again. So to everybody, a very, very happy Diwali. Today is the Indian festival of lights called Diwali. Last couple days we had Dhanteras, and then the Choti Diwali, which is like the little Diwali, and then today we have the actual Diwali. So I will be doing the all the traditional puja and all the prayers later today after the live stream. So just want to wish all and everybody a very, very happy Diwali. Hope the next year is full of prosperity, wealth, and it's very much tied to wealth as well, because it has a pretty big significance of playing cards in Diwali, because you invite wealth into your home. And so, yeah, that's what I'm wishing and praying for everyone. That's what I will be praying for everything when I do sit down over video call with my family later today when we're doing the puja. So, yeah, a pretty big event, or big day basically in all of India. And that's also one of the reasons why gold and silver tend to rally a lot, because of course Indian traditions very much focus and center towards buying a lot of gold and silver. This year has most likely been a lot lower compared to previous years because of the significant rally in both of these commodities, and as a result I think a lot of gold and silver jewelers in India are not having the best year because of this very reason, how expensive it's become to actually buy gold and silver. But it's a very, very big thing, of course, in Indian culture, as well as weddings in India. And as a result, we're seeing a very significant rise in prices of these commodities. And of course, among many other reasons as well, right? So, yeah, thank you so much for joining, everyone. Definitely drop a like as you're coming in, and happy Diwali to all of you. And Friday, I didn't even need the morning coffee. I know, Hunter. It's crazy, right? The volatility was enough to wake us up, getting up to over 28, 29. And of course, we're getting this momentum back lower as a lot of these asset classes are now shifting back higher. Ethereum's back over 4,000. Bitcoin's back over 110, 111,000 right now. But I would still not trust this rally, right? I would still not trust this market momentum, given that we have seen a lot of kangaroo market type situation where we're just kind of fluctuating and there is a lot of volatility. We're just kind of trading sideways in a range. And so really my personal opinion in this market is of the fact that we are trading sideways. There is no clear signs of direction. And I would even go as far as to say that there are early signs of some lower highs forming in this market, right? Couple times we've tested the Friday's low. And then, of course, last week, not last Friday, but the week before that, was this right here, right? So that was not last Friday, but the Friday before that. And last week was this entire trading, right? This is all of last week. So this is the 5 days of trading in range, right? So we're consolidating in that range and a couple times getting validated here at that support. And so there is still no clear signs of direction. We're clearly getting rejected at 6,700. We're also getting validated at 6,600. So essentially a 100-point range within which we're trading. And if we do see any kind of selling pressure, if S&P 500 were to retest 6550, eventually take this out, then we could be in some serious trouble for this market to essentially move lower, given that this would take out a very, very strong support. And as a result, we would also be making some lower highs and lower lows. And so that's why I'm a little bit, on the fence of how much do I really want to be buying. Also because it was an interesting dynamic, because even though the volatility was hitting that 90th percentile, right? So we got up to 29, which on paper, yes, is a 90th percentile. But how much was the S&P 500 down? How much was it down from all-time highs? 3%. 3%. And if you were to compare that to, let's say, last time we got the volatility prior to the April, prior to the April spike here. So this right here, of course, was April 2025 when we got the U.S.-China trade wars, Trump coming into the office and threatening everybody, all the country, the entire world with tariffs. We got up to as much as 60. But prior to that, this was the exact same level, right? For back in March. So March 10th is when volatility once again spiked to 29. Exactly the same level as where we were last Friday, right? So that's the red line, as you can see right there. And so if we were to come back and check where the markets were on March 10th of earlier this year, let's just do a very quick calculation. This right here is where we were. So this is the entire sell-off, right? I'm just going to remove the Fibonacci levels here for a quick minute. But this right here was the entire sell-off, right? Just imagine this was the entire sell-off back when March 2025, earlier this year, when volatility spiked to the same level as it was back in Friday. And this was the entire drop from 61.50. It dropped about 10%. So we actually witnessed a 10% correction for the S&P 500, the same exact time last time when volatility was at the same level as it was last Friday, right? So getting up to over 29. And of course, as we got the volatility to trade at over 60, we were in a full-blown bear market at one point, down over 21%. So what does that tell you? That tells you that, okay, volatility is, or indeed did get elevated, but that did not translate into significant amount of selling pressure, right? Cheaper puts getting bought in order to hedge the portfolios. That's exactly what I mentioned in my Discord post as well, that there is a level of uncertainty in this market. Institutions are hedging their bets by buying puts. They're not out there selling, but they are essentially hedging, because that's one of the ways volatility also does rise, because it is essentially calculating the options activity on the S&P 500. And as a result, volatility, of course, can be a little bit more disguising or giving us a bit of a disguise here, as it is getting elevated, but the markets are not really reacting in the same way. And so, again, 3% drop, volatility getting up to 29 was enough of a reason to dollar cost average a little bit, but not go super heavy, because we were still not off the highs all that much. It was just a little bit. So, okay, Irene, thank you so much watching from Philippines. Chris, happy Deepavali from Malaysia. We have Indian as a third population. We also celebrate the holiday. That's incredible. That's amazing. Happy Diwali to everybody who celebrates. And the audio is breaking. If you want to reload, it should be fine. I don't think the audio should be. Is there an issue with the audio? Can you try and reload? It should be fine. If you refresh the stream, it should be okay. Sometimes there is some issues with YouTube and stuff. So, let me know if audio is working. I missed the Friday opportunity because I'm not in the Discord yet. So Janinder, definitely do join if you are interested, because I did send out all the alerts. I did specifically mention what stocks I'm buying at what prices. And pre-market, I sent those alerts 6 minutes before the market opens. And it all comes down to preparation, as I mentioned in my previous video, and doing your homework. And that's what this community is all about. We're doing our homework. We're being prepared. And we are never going to be forced out of our positions. We're never going to have margin calls. We're never going to be at the mercy of somebody else, right? That's the last thing you want to do as an investor, is be at the mercy of somebody else, some other institution, some other person, because that is when you lose control. And when you lose control, you can make decisions on your own. And when you have full control over the situation, you can be making decisions on your own. You have full ownership of your decisions, and as a result, you can think more clearly as opposed to being at the mercy of somebody else. So that's why we don't take margin. I don't recommend margin for anybody, unless, of course, you are super advanced and experienced. You know what you're doing. And then I also encourage everyone to be prepared, have some cash sitting on the sidelines, never exhaust all your dry powder, never go all in, because opportunities can come up out of nowhere. And if you don't have the cash, well, guess what? You're going to be sitting on the sidelines with no cash, while other people are out there making money and, of course, taking advantage of those opportunities. So that's kind of the core philosophy of our channel, of what we do, why we do it, is to, get people to be super prepared and do their homework before we execute. And execution, like I said, is really just 5% of the job. Trading is really should be the 5% of the job. 95% is behind the scenes, doing the homework, getting ready, getting prepared. And that is putting together a list of stocks. Where do you want to buy them? How much do you want to buy them? How confident you are in those companies? And that's really what it comes down to. So yeah, let me know if you have any questions. More than happy to help. And okay, perfect. Refresh worked fine. That's great. It was breaking, but if you reboot your phone or computer, it will be fine. Perfect. Awesome. So yeah, coming back over to Bitcoin here, 110,000. So again, we have been selling off a little bit into this lower highs and lower lows. We did get down to low 100s, so getting down to $103,000, $104,000 here. And now we're starting to see a little bit of recovery back up. And 117 is going to be that initial resistance once again. And same thing with Ether. We came down quite aggressively, trading down to as low as 3,500. Ether has also been very, very volatile. But this right here is going to be that area of support, and that next resistance is going to be at 4,250 for Ethereum. So that's going to be that level to watch. And also, don't forget, what is the most important catalyst, economic catalyst that's going to be coming out this week? Let's see who has the answer to this question. Who remembers? What is it that we're going to get for this week as an important data release, as an economic catalyst that's going to be coming out, that's going to most certainly be moving the market? It was pushed out because of the government shutdown. BLS has been in a complete suspension because we haven't really gotten any updates from Bureau of Labor Statistics in like 2 weeks, in over 3 weeks. So this right here is the suspension of federal government services. And of course, we haven't seen the site update since October 1st. And so it is 20th today, so just about 20 days. We haven't seen any reports come out, but there's going to be one report that comes out this week. Super important for the market and the Federal Reserve. If you haven't guessed it already, of course, it's going to be your inflation numbers, your CPI report. And Trump's Truth Social messaging is the most important. Yes, that is also going to be very, very important, as it always is, as whatever Trump says. And of course, he can move the markets with just a few words. In fact, with just a few sentences, he's got the ability to move trillions of dollars, right? So that is always going to be important. But yes, other than that, we've got CPI numbers, which were rescheduled for this week. So if you come over to the BLS website, this is the 2025 September release rescheduled. So BLS will publish the September 2025 CPI numbers this Friday. So on Friday, October 24th is when these numbers are going to be released at 8:30 a.m. Eastern. Of course, I will be live to cover those CPI numbers. And what's also interesting is that the CPI estimates are not super great. They are a little bit on the higher end. So if you come over to Econ Day, we can also check that on our website on MoneyVest. But let me just go over to Econ Day calendar. Let's do that. There we go. Okay, so this right here, delayed, is the consensus, or basically the CPI numbers that are going to be coming out. So if you click on the consensus, here we go. 3.1% is going to be the year-over-year CPI, with core CPI, so excluding for food and energy, sitting at 3.1% as well. So both of these numbers expected to, one of them to accelerate from 2.9 to 3.1%. So that obviously is not going to be great news. And ex food and energy, so core CPI, expected to also stay at 3.1%. So both of them are going to be significantly higher than what the Federal Reserve, what the Federal Reserve's target is, right? So if you come over to subjects, consumer price index, if you come over to the charts themselves, this is where we are. And this is what we have been witnessing since April. 2.3, 2.4, 2.7, 2.7, 2.9, and then an acceleration of 3.1. If you get up to 3.1, that would be the highest level since May 2024. May 2024 was the previous high at 3.3%. Since then, we have been under 3. But if you do get up to over 3.1, that would be the highest level in over a year and a half for CPI. And of course, core CPI continues to sit at 3.1 for 2 reports in a row. And we, of course, were at 3.3% earlier this year. So we have come down, but we are still pretty elevated compared to the Federal Reserve's target. Now, coming over to the FedWatch tool, which also is a good indicator of what the market is pricing in for in terms of rate cuts. We've got 9 more days until the next Fed meeting, and the Fed meeting is going to have to rely on just the inflation data and not the labor market report to actually make their decision, because the labor market report has still not come in because of the government shutdown. But there is about a 99% probability the markets are pretty much locked and loaded here with a 25 basis point rate cut that is going to come in, right? That's literally what the markets are pricing in. And for the first time in a long time, rates are going to be sitting at sub 4% in the US. So if I do federal Fed funds rate, and let's just do that. Fred, I come over here. This right here, of course, is the entire history of the federal funds effective rate. If you zoom in a little bit here, right now we're sitting at 4.33. Another 25 basis point cut is going to sit us down at 4, under 4, so 3.75 to 4%. That's going to be the range. But you'll notice the last time you were actually at sub 4 was back in November of 2022. So we'd be hitting a 3-year low for Federal Reserve's interest rates when they do indeed cut at the end of this month in about 9 days, since there is about a 97-98% probability that they're going to cut 25 basis points. So we're going to be sitting at a 3-year low when inflation is going to be sitting at a 1.5-year high. So something to keep in mind as we are progressing in this market. So, okay. Earnings are also very, very important, by the way. He can move it with an emoji. That's right. If you were to guess one emoji that Donald Trump could post that would tank the market, what would it be? Comment the emoji in the chat if you believe there is one emoji that Trump could post on Truth Social that could tank the stock market. Right? Just one emoji. I just want to see one emoji from everyone. Just post one emoji that you think, if Trump tweeted that on Truth Social, could tank the market at the same scale as we saw a couple Fridays ago when he was hitting the tariffs. Okay, so we've got an angry emoji, we got a poop emoji, we got a fire emoji. The China flag. That could be an interesting one, but you never know if it's like making a deal with China or threatening with China, threatening more tariffs on China. You never know. We got another angry plus cursing emoji. That definitely is going to be a bit fiery. Mario's posting a sad emoji. Yeah, I mean, that might still not tank the market though. Yes, gold is breaking out. Nuke emoji. I don't even think that we have a nuke emoji. Oh yeah, so we've got the helmet. We got the army helmet. So that could be, the Pinocchio emoji. Robinson sending in. Fire emoji, I feel like could do the job. Yeah, the nuclear emoji. Okay, Car is sending in that one. China, and then looking in. It was a worried emoji. Okay. Game over. The game over emoji is literally going to be game over, I feel. Okay. Yeah, that's nice. So rocket emojis, rocket and anything money related is probably going to send the markets flying. I think that's what's going to send the markets higher. If you ever post like a bull or rocket or money or the dollar sign on your tongue, the one that Hunter sent, all of that I think is going to send the markets flying. But the waiting emoji, the hourglass, I think that's going to be more like waiting. But yeah, rocket's going to be higher. A teddy bear? I don't know. What if he sends like a down emoji? A down emoji could actually do some serious damage, I feel, for us. I think if he sends like this down emoji, then that can actually do some damage to the market. But Walt is sending the dab. It won't let me send the bomb emoji. I think somebody already did. The virus. Anyway, so coming back over to the markets, enough with the emoji speculation. All right, so do you sell covered calls in a long-term portfolio, tickers like SMH, VUG? So no, I don't. I like to keep the long-term positions completely long-term. I may from time to time sell like super far out of the money calls. Like I do have $500, $600 calls on Tesla that are both up. They're going to expire at the end of this year. So those I have. Palantir, I've got the 210 calls, which are getting awfully close. So yeah, very, very rarely would I do that. But to answer your question on SMH and VUG, I'm not selling any covered calls. Lululemon is finally pumping here. So back up to over 171. It's been consolidating sideways. We got a very strong support here in the 160s. It did get up to as much as 180. Then, of course, selling right back down. And we got a small gap to fill for Lululemon here. So that's going to be that gap to potentially consider for Lulu. And my target's going to be back up to $208, $209 for this stock. So any gold ETFs to consider? Well, GLD is part of the ETF watching list, or ETF shopping list, I should say. That is one to consider here, but just take a look at this run up. I mean, this is just insane. A 30% rally in a gold ETF, and since November 2023, this thing is up 136%. Year to date, it's up almost 60%. So having one heck of a year, and of course, gold itself is hitting brand new all-time highs once again, almost getting up to all-time highs at just over $4,300 per ounce. I loved doing quickly covered calls on SPY and QQQs. I used to own VOO and VUG, but sold those and switched to SPY QQ because they are very liquid and have dailies. Yes, and that's one of the discussions that is always quite interesting between Vanguard funds and State Street funds, because State Street is the one that actually invented SPY, if I'm not mistaken. So let me just double check here. Yeah, State Street Global Advisors, so SPDR. And I believe QQQ is also part of State Street. Or no, QQQ might be Invesco. Yeah, so one of the pros and cons here is that QQQs and SPY might have a little bit slightly higher expense ratio. I think SPY is like about 9 basis points and Vanguard is like 3 basis points. So it's like 3 times more expensive, which of course, if you're depending on your volume, it can make a difference or it cannot make a difference. But it really boils down to options trading and trading in general, because SPY and QQQs are some of the most liquid, most traded ETFs in the world, not just in the US, not just for stocks in the world. They are some of the most liquid and most ETFs with the most amount of assets under management, right? So that in itself is massive volume, right? We're talking about 100 million shares traded every day with an asset base of almost 700 billion. QQQs also is going to have a very similar profile, 72 million shares traded with over 388 billion, is going to be the assets under management. So yes, they have daily, weekly, monthly options. So they are very good for trading. But if you are looking at long-term investing, then I do prefer VUG, VOO as better vehicles to be investing in, just because of the lower expense ratio. And not that, they lack of options trading so much on those. Is there any cheaper version of GLD for options? I'm sure there's going to be. I'm sure there's going to be something that is listed on the NASDAQ or NYSE, or you're just gonna have to do more research. And the only thing is just make sure that they are from a reputable issuer with good liquidity, good volume, good asset base. Because sometimes you might be trading a cheaper price for whatever ETF that you're trading, for liquidity, for issuer reputation, for asset base, things like that. And that is not something that I'm willing to compromise on when I'm investing or trading ETFs. So that is something to keep in mind. But IAU for gold and SLV for silver ETFs, because they are also liquid for covered calls. Any CSPs on BMNR? So BMNR has been kind of bouncing around between 47 and 57. If you were to consider a cash secured put on BMNR, I would look at $47 as a potential option, with a resistance up to as much as $57, right? So that is going to be the two levels within which it's been trading, right? So it's been kind of bouncing around those two levels there. So that's where we are. Do you think gold will drop after the peak or just stagnate? It's kind of hard to say. I was looking into some other different kinds of analysis where gold is on this like 12-week 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. On this 10-week rally, on this 10-week winning streak. And so as a result, this is like, I think, second or third time that it's happening. And every single time it has collapsed after the streak has ended. But I feel times are also changing a little bit. If you just look at gold performance against the S&P 500, it's actually outperformed for the last 4 years, not just 1 year, 2 year, 3 years, but this has been a 4-year trajectory of gold outperforming the S&P 500. And that is something to take note of, because we're not creating more money. We're just making it worth less so we feel rich by looking at the S&P 500, whereas the gold is the one that's actually pushing higher, hitting new all-time highs. And of course, you have to look at, it becomes a bit of a question, and I strongly do believe now it's even more important to be looking at individual stocks than it has ever been before. Because if you're just looking at the S&P 500 or Vanguard, which in its own way, it's a very passive way of investing, and it's going to give you the average 8%, 9%, 10%. But the question then becomes, is 8%, 9%, 10% even something worth achieving, right? Because inflation on average over the last 5 years has not been 2%. It's not been 3%. It's not been 3.5%. It's been closer to 4.5% over the last 5 years. So we can't even benchmark against a 2% inflation. You're looking at 4.5% inflation. Plus on top of that, the dollar's been coming down. So on a net real basis, what is your true rate of return if you're just investing in the S&P 500, right? Those kind of studies is what we have to really look at to really understand, okay, where is your capital best allocated? And I would argue individual stocks is where one needs to be, right? Because a lot of these companies like Nvidia, Palantir, Tesla, SoFi, like they're the ones that are going up like hundreds of percentages over the last 4 or 5 years. And they're the ones not only crushing inflation, but generating, life-changing wealth. So yeah, I think that's really what it comes down to, is like focusing on high quality companies, individual stocks that have the potential to compound over many, many years and will not only outperform inflation, but also outperform every other asset class out there, and will actually generate life-changing wealth for every investor. Like I said, S&P 500 and NASDAQ are good. They have been pretty strong passive wealth builders, but when you actually look at it in real terms and inflation-adjusted, dollar-denominated terms, then it's a whole different conversation. Yeah, Gary says, last 5 years, inflation was almost double for the things I buy, food, groceries. It's been like that. If you actually calculate the inflation index and then try to run a simple analysis to calculate the annualized return, that's where you would end up. It's been pretty high. Not to even mention the specific items. I'm just talking about the general level pricing. If you look at specific items, I'm sure things are up like 20, 30% on an annualized basis over the last 5 years. So, would you describe your crypto positions? Is it investments or short-term trade? So Vault, it's going to be mostly long-term. I'm not trading crypto. I'm not one for buying and selling Bitcoin like quickly. So it is going to be mostly focused long-term. So BITX, Ethereum, those are the only 2 crypto positions that I have. And that's what I'm going to be dollar cost averaging into. That's what I'm going to be accumulating over the coming months, years. Like I said, it's going to be more long-term. But keeping it also at a level where I feel comfortable. It's not going to make up like 20, 30, 40% of the portfolio. It's going to always fluctuate around 5 to 7%. And as the portfolio grows, I'm going to continue to allocate more money into it. But we'll keep it always around that number in the low singles to have exposure, but also, not to go crazy. Not to be MicroStrategy types, just kind of loading up on crypto. How long do you hold a BITX? It has decay. Yes, so it has decay, and that's one of the exceptions to the rules that I'm willing to kind of be okay with, because most of the times I kind of fully recommend against like holding any kind of leverage ETF because of the decay. But with BITX, I am fine with it because it does have a pretty high dividend yield. So as you'll notice, it mostly been fluctuating sideways, but it's got a dividend yield of over 12% per year. And so that is pretty high. We've received some very, very good checks from BITX on the dividend side. And I just have a dividend reinvestment into BITX, and kind of follows this nice little path here of higher highs and higher lows. And it's mostly been consolidating sideways. So now 44, 45, anything in the low 50s or 40s, like I accumulate a little bit more. Either I'm selling puts or I'm buying more shares of BITX because of crypto. But like I said, just be very careful. Apply it to your own strategy. Please, not just with me, but with anybody in the investing world, don't just follow blindly or copy anything. Investing is very person specific. So all we're trying to do is share our strategies, share our insights. Even in the Discord, we're all sharing our research, and everyone has to kind of take that in and apply it to how they see fit in their own life, right? So because everyone's got different perspectives, different objective, different risk tolerance, liquidity needs, tax jurisdiction. I mean, there's a very long list of how different we are from each other. And so definitely apply it to how you see fit in your own objective here. What stocks beat inflation to you? Well, I mean, there's a lot of them. There's a lot of them that have actually destroyed inflation over the last 5 years, 7 years, 10 years, depending on how long back you go. So it really is the top, I would say, top 10% of stocks in the S&P 500. Again, this is just not a back-tested number. Maybe I should do this kind of analysis a little bit more. Would be very interesting for, I think, a lot of people. But really trying to figure out, okay, over the last 10 years in the S&P 500, there's 500 companies, but which companies over the last 10 years have actually contributed to the most amount of gains in the S&P 500, and which ones actually did beat inflation on an annualized basis. Because while the S&P 500's average is about 7-8%, or might be a little bit higher, especially in the 20s, what has been the biggest contributor, and I'm sure we've already know the names, but by how much and what's been the actual return for these companies might be an interesting study for us to do. Did the AWS outage affect you this morning? It was unsettling to see Robinhood dead and froze at 4 a.m. Yes, I think the MoneyVest platform was also having some issues earlier, but I think it might be back up and running now. But yeah, we also host on AWS, so their outage definitely affects us as well. Karthik, okay, since this is an investment, what would you tell your friends if she asked you, why do you invest in crypto? What would be the arguments that is the use of crypto and prospects for the future? So I think it has a lot more to do with the demand and supply factor, just because of the fact that it's limited in supply. It's getting more and more mainstream, and especially with the rise of crypto ETFs, with BlackRock's launch, iShares, a lot of financial institutions are now getting involved, and they're also building reserves for cryptocurrency is enough of a reason that the big players are indeed stepping in. So there is widespread adoption, there is limited supply component, and that's, two of the main reasons why I would say definitely consider crypto as part of a portfolio of a somewhat diversified strategy. You still want to be pretty concentrated on some of your highest conviction bets, but you don't want to be overly diversified either, right? You don't want to have 500, 600 different bets. You want to be pretty concentrated, because that's really what's going to generate significant returns. Because Tom Lee says so. Yeah, that's another reason, right? $1 million per coin, Ethereum 10K. And I think the US is also going to be eventually moving towards a digital coin, where it's going to be moving away from more and more paper currency to more digital, centralized form and mode of payment. So, yeah. All right, so market's going to open soon here, and let's just go over to some stocks. We got QQQs up 60 basis points, SPY pushing higher, SoFi, Nvidia flat, Tesla here moving up very nicely at 1.2%. Among Magnificent 7, we've got what is actually moving up. Apple here 1.7. We got Meta pushing higher, Google, Netflix, Amazon. All of these are pushing up. And then, of course, you got a lot of hot names running on momentum with Bitcoin leading the way, BITX. We got Bitfarms, Archer Aviation, BMNR, Iron, all of these pushing up here. But like I said, I'm a little bit skeptical of this indecision in this market. And, last week's candle was also quite interesting that we had a long wick, a bottom wick. The entire body is inside the body of the previous candle. So we're kind of still foreshadowing the last week's move and the entire flush that we got here at 65.50. And right now, the markets are still pretty uncertain on many questions that we have. Earnings are definitely going to be playing a big role because earnings season is quite packed for this week and next week. So 2 weeks of incredible amount of companies coming out with earnings. So yeah, let's do this. Volatility back in the low 20s here. The moment it gets up to 29.30 again, I'm pressing the buy button. It's just one of those memes where the guy's sweating. He's got two buttons, one saying something, the other one saying something. And for us, it's really easy. There's only one button. Volatility gets up, money invest index comes down, and we are pressing at the buy button again. It's really not that complicated. We just have to be prepared for when it gets there, and we are ready to deploy. You don't mind the Bitcoin BITX expense ratio? Not really, because like I said, the dividend yield is quite high, and for those reasons, it's still you're still netting a pretty good amount, with of course the potential for gap revision. I was buying like BITX, so I've got a pretty relatively low cost basis. We've been buying since here, like in the 20s, mid to high 20s. So I'm like 70-80% up on my long-term portfolio. And then, of course, in the options portfolio, I've got, I think, a break-even position on this for BITX. So the plan really with the options, of course, is to sell more calls. I did close out a lot of them last week. And then my plan right now for today is going to be selling calls on BITX, most likely at the $60, $65 mark. We'll see what kind of premiums I can get. So that is going to be the plan for today, actually, which I should have just kept it for the Discord members, but it's fine. That's what I'm going to be doing, is selling more calls on Bitcoin. I did have a lot of options expire last Friday, so I did buy back and close a lot of options. And so this week, the plan is to get some income from selling a lot of options. And the good thing is that Bitcoin already is pushing higher, so BITX up 8%, so premiums will jump very nicely today. So I'll be able to capitalize on that when I sell those. So, that's where we are. I like IBIT, Ethereum. That's what I have. So I can sell weekly covered calls. And that's also what I have, ETHE, as part of the portfolio as well. Which, by the way, has a $34 or $35 call strike. That's up like 70% right now. And I'm planning to close that one out very soon as well. So, all right, everyone, 20 seconds to get this week started, which could take a turn, could go any way. We have no idea what this week is going to look like, especially when you consider inflation numbers, Federal Reserve meeting in 9 days, earnings. Got lots on deck here for the markets for this week. So hope you all are ready. Here we go. Markets are open. QQQs, NASDAQ, S&P 500, everything starting us off on a pretty nice rally here. So we'll see if this actually does last or if there's going to be any kind of pullbacks. So thank you so much for joining, everyone. Really appreciate you all. Again, link's going to be down below if you're interested in joining us. We're going to be running a Halloween discount very soon. So everything is going to be most likely off, discounted more for Diwali and for Halloween. So we're going to get that started soon. Feel free to join if you have any questions. Email me at admin@moneyvest.com. I'm going to jump into our Discord, share some alerts, looking at BITX covered calls, and then closing out some existing options as well. So thank you so much. Happy investing. I'll see you all